Hi, this is Todd Baker, your certified mortgage planner, and in this video we're going to discuss cash to close on your home loan. So cash to close is actually a fairly simple concept. It's the amount of money you have to bring when you go to the title company to close on your home loan. And it's pretty simple to calculate. It's basically your down payment plus all of the closing costs associated with getting a loan. And I'm going to give you a real simple overview in this video of how it works. Okay, so we're not going to go deep into different home loan programs, but there are different home loan types. The top two that people use are conventional and FHA. I've also included a VA, which is if you're a veteran, in this example as well. So basically, in this example, we want to show you 5% down, right? So on a conventional loan, 5% down, so that's part of your cash to close right there. And then you have closing costs. Closing costs are usually around $3,000. They typically include lender fees, recording the deed, fees to prepare the loan documents, and escrow fees and title charges paid by the borrower or the buyer. So there's a section that you pay as a buyer. And then you have what's called your prepaids. What the prepaids are is when you buy a house, you have to pay your insurance up front for a year, and then you also have to put money into an escrow account. An escrow account is money that's collected each month that goes towards paying your taxes and insurance annually. There is a way to waive the escrow account on a conventional loan only. All the government loans require them. If you put 20% down more on a conventional loan, you are allowed to waive that. Most people don't do it though because it just creates a situation where you have to pay your taxes and insurance once per year, and it's the same cost annually. But like I said, it's pretty simple calculation really. It's a down payment plus your closing costs, right? And which are broken down into transactional costs and prepays for insurance and taxes. And then right here you have your net cash. So in this example, it's $19,000. Now, on an FHA loan, similar thing. It's a lower down payment and similar closing costs and prepaids. FHA has a funding fee, but it gets financed. But one advantage of the FHA is it's a little bit less down. It's a little bit lower cash to close. Why? Because the down payment's lower. And then for veterans, they get 100% financing, but that doesn't mean there's no money out of pocket. You still have your closing and your prepaids. VA also has a funding fee that gets paid, but it gets financed as well. So in this case, it's about $6,200. Now, one quick note, I'll have other videos that go into this in more detail, but the cash to close and the down payment, that has to be verified funds. And so how that gets verified is typically a depository institution, meaning checking account and savings account. It could also come from a retirement account, IRA, or usually what people do is a 401k, either a distribution or a loan. A loan is a great way in a 401k because there's no tax consequence to that and you pay it back yourself, the money. Other examples is if you have stocks, bonds, or mutual funds like an Edward Jones account or that kind of brokerage account. It could come from a gift from a family member or a close family friend. And maybe there's another way to look at it too, like what doesn't count. Well, pretty much can't use cash, like actual cash. Mattress cash is what people call it, right? Cash on hand, because it's almost impossible to document. There is some limited amount you can use in certain circumstances, but that's not. Sometimes I'll have clients who come in, they want to buy a house, they need $10,000, and they're like, oh yeah, I have $10,000 in cash. You can't use it. It needs to be sitting in your account for at least 60 days. The other thing that's hard to use, or you can not use, is borrowed money unless it's from a home equity line of credit. So for example, you can't take money off of a credit card and use that towards the down payment. It's by definition ineligible use of funds. So that gives you a quick idea of cash to close. Hope you found that helpful. Please feel comfortable reaching out to me with any questions.